Thank you for joining us. Welcome to Business Incorporated. I'm Chimezie Obi Iwagu. Today on the show, Kenyan President renews Central Bank Governor's term. And IMF expects Namibia's economy to contract again in 2019. Plus, Guinea iron ore prospectors set sights on ArcelorMittal rail. Let's get the show started now with the markets, and starting with markets in Africa. The Nigeria stock market resumed trading today after the Muslim holiday on a negative note, with the index down a whopping 2.47% at intraday. In South Africa, the JSE index was 0.37% higher. The Egyptian market remains closed for holidays, while Kenya ended Wednesday's session up 0.41%. And the markets in the Middle East remain closed for the Ramadan holiday. However, on Monday, all the indices were in the green. The Abu Dhabi index was up 2.82%, while Dubai's index was up 0.79%. In Qatar, the index was up 1.49%, while Saudi index gained 1.22%. And in Europe, stocks traded higher in the morning as investors geared up for the latest decision from the European Central Bank. Well, Conrad Busen will tell us more. Good afternoon, Conrad.
Good afternoon, Chimi, and hi to everyone watching in Nigeria.
Right, let's start with the big news from the auto industry. Fiat Chrysler has called off the merger with Renault. What's going wrong there, and how are investors reacting to that?
Well, in terms of share prices, Jimmy, the share price of Fiat Chrysler is holding up pretty well, while the share price of Renault is really plunging around about 6%. But make no mistake, this is not really a strong pro statement by investors for Fiat Chrysler. Both car makers are considered to be too small or to be too badly equipped for the challenges that all of the automakers worldwide are facing in terms of technological transition. So a merger would have made sense from an industrial point of view, and also many investors liked the idea. What went wrong? Well, the French Republic, the French government, is a large shareholder of Renault with a share of 15% of the French car makers. And for all we can hear, on the trading floors here in Frankfurt, the French government wanted concessions that Fiat Chrysler simply wasn't willing to accept. Namely, the French government wanted job guarantees at the French factories of Renault, and also, as those French Renault factories are much better used to capacity compared to the Italian plants of Fiat, which makes those French factories much more profitable and much more competitive compared to the Fiat factories. The French government is said to have wanted a higher valuation for Renault in this deal. And as Fiat Chrysler had only to offer a merger of equals, evaluating both companies the same value in the future company, Fiat Chrysler simply wasn't willing to accept this and withdrew its offer.
Well, the European Central Bank has just come out with its decision on interest rates. Tell us the details, and what can we expect from Mario Draghi's press conference later today, which is the day after the EU Commission also recommended an excessive deficit procedure against Italy, which could end up in a €1 billion fine for Italy.
Yeah, highly political press conference to be expected today. Jimmy, let me give you the numbers first. The interest rate for banks when they borrow money from the European Central Bank has been left unchanged at 0%. And the so-called deposit facility, which is the money that banks have to pay when they park money at a bank account at the European Central Bank, remains at minus 0.4%. So far, so good. The devil is not in the numbers this time, it's in the wording. The ECB also has announced that the Government Council expects the key ECB interest rates to remain at their present levels at least through the first half of 2020. And this is longer than what had been in the projections up until now. As a consequence, this really is a more dovish stance. It's a more generous monetary policy by the ECB. And look at what the German share index DAX has done afterwards. It's made a plunge downwards because obviously investors are not really willing to see the ongoing generous monetary policy as a positive sign for businesses, but as a sign of weakness. The line that Mario Draghi is going to walk on that press conference today is even going to be finer than usual because, of course, the criticism of this monetary policy has been already pretty high in large parts of the euro area, namely here in Germany. Now with Italy getting under the scrutiny of the European Commission because of its budget, of course, the ECB and its super generous monetary policy, which supports economies like Italy, will be criticized much more loudly.
All right. In all of these, what's the mood like in the markets? Has the trade war between China and the US become a bit less of a concern?
No, it hasn't. Of course, I mean, I talked about the German DAX's reaction to the ECB, and of course, this adding to this is the trade spat between China and the US, where an escalation is nowhere in sight. Overnight, the US President Trump has threatened even higher tariffs over Chinese imports. China says that this will fight until the end. At the same time, we're getting reports that China is proceeding, the United States is proceeding with an arms sale to Taiwan, which is, as you know, a country that considers itself independent from China, but the Chinese People's Republic considers Taiwan being part of China. So this arms sale by the Americans to Taiwan is likely to be another point of contention between the countries. That's not really the environment that investors like to see.
All right, thank you. Well, I guess investors will continue to digest today's ECB decision and, of course, the euro area data. Thank you for your time. Enjoy the rest of the day. And market watchers are paying close attention to the press conference held after the Governing Council's meeting with President Mario Draghi, commented on several topics, including the state of Europe's economy, tensions, and banks in the euro area. Well, let's bring in Simon now for details on how this is being digested in London. Good afternoon, Simon.
Afternoon, Chimmy. How are you doing?
So, all eyes are on the ECB today. Mario Draghi and his team just announced their monetary policy guidance, of course, leaving the interest rate unchanged. Is that in line with investors' expectations in the UK?
Yeah, the European Central Bank will try to give the Eurozone economy a fresh boost today. You were just hearing from Conrad in Frankfurt. Obviously, the ECB will likely offer new sets of loans that will effectively pay banks if they borrow cash to pass it on to households and firms. Beyond that, I think most people expect Draghi to keep the overall tone moderate, again, as Conrad was saying there, by keeping the door open to further stimulus. I think three things investors will be looking out for here today at the meeting. The first is TLTRO. The acronym may be clunky, but the program, which is designed to keep Eurozone companies open in the face of an economic slowdown, is very important. Most investors expect TLTRO 3 to be slightly less generous than 2, but the ECB may also feel the need to take out additional insurance on liquidity. Investors will also be paying close attention to ECB staff forecasts on the economic outlook and inflation. The ECB is likely to be overly pessimistic on its outlook for near-term growth, but overly optimistic for 2002. The ECB may also raise its 2019 inflation forecast to 1.3% from 1.2%, while maintaining forecasts for 1.5% in 2020 and 1.6% in 2021. Of particular importance to investors will be whether the ECB keeps its estimate of 2021 core inflation forecast unchanged at 1.6%. Finally, investors here will be watching out for the rate tiering. The ECB's negative deposit rate of minus 0.4% has long been a source of unease. critics are worried that the rate on deposits parked overnight at the central bank, when in negative territory, reduces banks' lending potential. There has been speculation the ECB could eventually move to introduce a tiered system that would exempt a portion of the banking system's excesses reserves from negative rates. But many economists argue it's still unlikely. So, Chimmy, lots to look out for at that meeting later today.
Okay. Well, on the data front, gross domestic product data for the euro area was released today. What are the numbers for the UK economy saying?
Yeah, if you measure the strength of the Eurozone economies using hard data like quarterly gross domestic product reports, things look pretty decent. But soft data is painting a gloomier picture. Hard data backwards, the latest soft numbers, think of consumer confidence indicators, surveys of business production and employment plans. That reflects the fears about the future. A lot of the conversation here in London about these GDP figures surround how Italy could face disciplinary action from the European Commission. As I know you guys have been covering Conrad in Frankfurt just then, it could ultimately result in an unprecedented fine. Something like €3 billion has been spoken about, although Italy's government seems to show little interest in a policy change. Not a lot from the GDP figures here to worry the UK markets. They are all up today, all positive and in the green. We've got the FTSE All Share up over 0.5%, then the FTSE 100 up by 0.68%, and the FTSE 250 also up by 0.14%. The pound also doing slightly better today, up against the dollar at 1.26, the euro by 1.12, and up by 0.16% on the Japanese yen.
Now in corporate news, UK insurer Aviva has said it will cut 1,800 jobs worldwide over the next 3 years in order to reduce costs. And of course, it plans to split its business into two. Now, Aviva has 16,000 employees in the UK. What is the conversation around this in London?
Yeah, so this is really big news, Chimmy. They provide around 31 million customers with insurance, savings and investment products, making them one of the leading providers of life and pension products in the world. Aviva has offices in 16 countries and a global workforce of 30,000 people. And like you said just then, 16,000 of those employees are here in the UK. The firm's UK sites include London, Norwich, Bristol, Sheffield, Eastleigh, Glasgow, a number of other cities as well. The company said that it intended to consult its operations in each country over the job cuts and would try to make savings through natural turnover and voluntary redundancies. It aims to cut costs by £300 million a year by 2022. The company's domestic rivals, Prudential and Legal and General, have fared a little bit better in recent years, and they've focused on life cover and pensions rather than general insurance like Aviva. But reaction here has been one of worry and trepidation, really. No one really knows which specific office and which city is going to be targeted for these redundancies. Unsurprisingly, the unions here have come out attacking these plans. They say they will strongly challenge any attempt to make compulsory redundancies, saying that instead any staff reductions should be found through voluntary redundancy or redeployment. We will have to wait and see where these job cuts take place, if indeed they happen at all.
We'll sure wait and see, Simon. Thank you. Enjoy the rest of the day. And the markets in Asia closed mixed today, while South Korea remains shut for a public holiday. The Nikkei 225 in Japan erased earlier gains to finish near flat at 20,774 points, while the Topix index declined 0.34%. Australia's ASX 200 rose 0.39%. In China, the Shanghai Composite fell 1.17%. Hong Kong's Hang Seng index was fractionally higher in the final hour of trade. And in the US, the stock index futures were higher this morning as Wall Street's rally on hopes of a rate cut from the Federal Reserve looked set to continue. The Dow futures indicated a positive open of around 73 points, while futures for the S&P 500 and Nasdaq also ticked higher. Comments from Fed Chair Jerome Powell on Tuesday further fueled expectations that the U.S. Central Bank is moving closer to cutting interest rates, causing U.S. stocks to surge. We'll take a break. Now, when we come back, we'll look at the domestic commodities space as well as an update from the Nigerian equities market. To stay with us.